Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is February 27, 2023. I will give you your three threes for the week and what a week it was. There have been some changes, so you want to stay tuned. But first, I'm going to go over our major asset classes, their performance, and our top three on a long-term basis. And then on a short-term basis, we're going to go over those changes on both equities and bonds. And then I'm going to go over our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes, their performance on a week, 3-month, and a 1-year return basis. For the week, we had a lot of profit taking, and that was across bonds, equities, commodities, gold, etc. And a lot of it went back to the US dollar and back to money market for the week. On a 3-month basis, though, looking out a little bit, commodities, S&P, the long-term treasuries, along with US dollar, were the negatives, while we had gold and international equities actually is where the money has been going over the last 3 months. But if we zoom out on a 1-year basis, a lot of red still, a lot of negative numbers, where the US dollar has been the only bright spot on a 1-year basis. All right, let's go over the top three major asset classes on a long-term basis, and there has been a change. As I've said in the past, their defense and offense have been battling over the past few weeks to months, and US dollar jumped back into the top three, taking the spot of dividend equities. All right, let's look at the bonds on a short-term basis. Well, we've gone back to protect mode. We did that back on Valentine's Day. We went ahead and decided to go ahead and take some of those profits as interest rates are going back up because of all the inflation data that's coming back in. Seems to be a little bit more sticky. So we went ahead and took some of those profits, booked some of those gains. We shall see. Even though we like the formation, we still have higher highs and higher lows, at least temporarily. We want to go ahead and just garnish some of those gains for right now. We'll see where this kind of lands, but we'll go back into protect mode. All right, on equities, we did exactly the same thing. They've kind of been trading in lockstep here lately. And we went, as of last Thursday, back into protect mode on February 23rd. And again, same type of formation. We still have higher highs and higher lows. However, with interest rates going up, that's affecting the equity market. So we wanted to go ahead and book in our gains of 2.5, and we shall see. The trading zones that we've talked about in the past, we're still trading within that 41 to 42 as our resistance zone, and our support zone seems to be somewhere in the 38.65 to 39.75. And we'll probably continue to trade in here, but we'll go ahead and take some of those profits and sit as interest rates and money market are more favorable. So we'll see where that goes, but we'll go ahead and take some of those gains for right now. All right, let's talk about our top three market movers for this week. We have a lot of corporate earnings again this week, and most of them coming from the retail section, like Target, Lowe's, Costco, Dollar Tree, Best Buy, to just name a few. We also have some other big companies like Salesforce, Zoom, Broadcom, Hewlett-Packard, and Dell also reporting this week. I have a listing here, and I'll show you here in just a sec. Our number two market mover for this week will be housing data. With interest rates going back up, we get the Case-Shiller National Home Price Index, and that will be on Tuesday. And they have projected to have fallen again by 0.7 in December, which would mark the 6th straight month of these deflationary home prices. So that's something that we're going to continue to see as these interest rates and inflation remain sticky and the interest rates remain high. Our third market mover for the week will be our PMI manufacturing and non-manufacturing reports coming out of the Institute of Supply Management. And they're tracking manufacturing in the service sector. The manufacturing comes out on Tuesday, and it's projected to slightly go up to 47.9, which will be a rebound after having 8 consecutive months of decline. So that will be a slight positive, but again, we need to get above 50 for us not to be in a contractionary type of environment. The non-manufacturing or services will be out on Friday. Here's a listing of the corporate earnings for this week. So if you own any of these or want to follow any of these, here's the listing, Thursday being the biggest day for some of the larger companies. That's it for this week. Thank you for joining us. Our next update is Monday, March 6th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.